Joining me now to discuss Securities Chairman and CEO Jason Trennert, President of Mahoney Asset Money Management, Ken Mahoney, and the CIO of XNL Wealth Advisors, Tim Courtney. Sorry, guys, long read, tongue-tied, but I'll start with you, Jason, because there's so many conflicting things out there. But one thing that all the experts always wait for is this capitulation. Yeah. I've always felt there was a rolling capitulation, and maybe there's more to come. But whenever we've seen investors this bearish, and it's, by the way, it's not just individual investors. Yeah. It's typically a sign that maybe something positive may be happening down the road soon.
Well, I very much agree with that. I think it's also important to note that the market bottomed on March 9th, 2009. There's actually been net redemptions for mutual funds and ETFs over that night before this week in that period. So you've never had the speculative excess. And I think part of the reason why we haven't had the speculative excess is a lot of that happened in the private markets, not the public markets. Right. You have not had a robust IPO market that would normally draw the retail investor in. So in my opinion, the fundamentals look awfully strong, and people are getting worried I think, for good reasons. By the same token, though, I'm very much of the view that this capitulation is a signal to buy, is a good opportunity to buy rather than to sell.
Ken, same question here. And I love that Jason brought up this point. Particularly equity right. Mutual funds or ETFs. I don't know. American investors sort of gave up on them a long time ago. But there is a general anxiety out there, and it gets worse and worse. And again, I think I see it amongst a lot of professionals too.
Well, people are very concerned by it. But think about this, though. They weren't liquidating in August, September while we're setting records. So after we've had the FANG stocks defanged, seeing a market cap of about $1 trillion being lost, now we're getting liquidations. It's kind of the opposite side of things. And so, look, the real investors, I really feel, buy high and sell low. And those August, September months we're setting records. What was the inflows? Tens of billions of dollars a month going into the markets and equities during that time. And now we've got, this kind of downdraft, and now we're seeing money coming out. And the only thing I don't like about that part, quite frankly, Charles, though, is some of these money managers are kind of hand-tied, so to speak. They're getting these liquidation notices, and they could be the biggest bulls, yet they have to, force liquidations, they have to make some sales.
Right. And Tim, another issue here, of course, the role of ETFs, I think, gets highlighted as well. Once that snowball goes, particularly passive investing, it seems to feed on itself as well.
Right. Yeah, and you have the difference between, short-term and more speculative investors and longer-term, truly investors that are wanting to invest in the market and the companies and profitable and productive companies the world over. And so we've gone through a period where we've heard over the last couple of months about how this is the longest-running, bull market, and people are starting to think, well, it's got to end sometime. And so if the market has gotten weak like it did in October, that kind of gave the market the push it needed to say, well, maybe we are headed for a recession. And I think the market is priced as though we are headed into a recession, but it also gives a lot of false positives. The saying the market has predicted 9 of the last 5 recessions. It's tended to do this before it did it in 2011. We didn't go into recession in 2011, and the market with the earnings is like right. has been said, fundamentally strong.
Right. Jason, to that point, we've seen PE ratios come in dramatically. Yeah. And, just using traditional valuation metrics, obviously it looks very like the market is significantly oversold. But having said that, a moment ago you said there are some concerns out there. What are some of the legitimate concerns in your mind?
Well, the legitimate concerns are more macro concerns. I would say that the Fed, one concern might be that the Fed might be over-tightening, maybe making a monetary policy mistake. I think we're...
So when I started with the 4 things that Jay Powell mentioned at the New York Economic Club, the second thing that he said, because he ranked them in possibilities or probabilities, I'm not sure if we consider taking all your money out of these ETFs a run on the banks, but it's akin to something like that.
Well, and I would also say another thing that would argue against him tightening next week even, and I think it's likely that the Fed will tighten next week, but one thing that would argue against it is the weakness in the financial sector, is the weakness in the banks themselves. I mean, if he's so secure about how strong the economy is, and I'm quite secure that the economy is strong, I'm also quite secure that there's very few signs of inflation. And I don't think there's no rush in a world of close to 0% or negative interest rates in the rest of the world. There's no rush for the Fed to be too far out ahead of other central banks.
And we had Draghi already say, hey, you know what, I'm keeping QE in the toolbox. And that was before last night, another wave of negative news, another wave of weak economic data in China. But, again, all eyes next week on the Federal Reserve and that Q&A afterwards should be explosive.
I mean, I tell you, Fed Powell's making volatility great again. I mean, I feel like the Fed raises rates until they break something. And before October 3rd, when we say, hey, we're really far away from neutral, something was already breaking this summer. We saw, like, home builders roll over. We saw real estate. We saw things that are tied to interest rate-sensitive sectors start rolling over before his October 3rd when he was saying we're far away from neutral. So you kind of have to scratch your head a little bit. And 6 weeks later, we're close to neutral. And here we are.
Yeah, I think everyone agrees that Jay Powell made a huge mistake. He maybe spoke off the cuff, rookie mistake, maybe. It seems like he regrets that moment, and he's tried to walk it back in a way that's not embarrassing. So we'll see. But Tim, to that point, the CPI report, I mean, everything went down. The only thing that was up was used car sales. I'm not sure why, but used car sales used car prices are going through the roof. What are you worried about right now in this environment?
Well, I think that the primary worry is, the market's pricing in weakness. And part of that is because of the trade uncertainties. And, we've seen weakening numbers come out of China. I think also Japan and Germany also were negative in the third quarter. So I think I want to see if the numbers are confirming what the markets are telling us. Both the equity markets and the bond markets are saying that weakness is coming. It doesn't seem like from other indicators that we're seeing that. And so I think this is probably overdone. But I would want to see what the GDP numbers are worldwide coming in over the next quarter.
Right.
And I want to see if the earnings are continuing and revenues are continuing to hold up. If they are, then this probably is well overblown.
We had a flash PMI here in this country. It was relatively unchanged. We had our retail sales report through the roof. The control group suggests that this is a GDP number between the number for November and October suggests GDP. I think that we definitely are going to have over 3% for the year. And then, of course, the benign nature of the official data that we're getting out. Is it possible, Jason, that the markets can create their worst case scenario, that these markets falling apart, that these redemptions create the recession that the experts are saying is out there, but it's hard to find in the data?
It's very difficult to do that without a real crash in the banks. And the banks are extraordinary.
They're looking ugly, though.
They're looking ugly, but I would say
terrible.
the banks are extremely well capitalized, much better capitalized than they were prior to the last
much better
financial
capitalized
crisis.
and reflected in their share price.
Absolutely. So I think it's hard to have a systemic problem without the banks really being hurt. And I think the banks are fortresses. I think they're on sale right now. Personally, I'm invested that way. So it hasn't worked out this year, but I'm sticking with it because I think those.
Well,
stocks
even
are
banks are
generating a lot of
downgrading
cash.
banks now. So. That's when you know things are bad. Okay?
That's right when you know you should be buying.
But if you draw it up, Charles, and you say, hey, what would you like for the economy to have? I'd say 3% GDP, 2% CPI, low unemployment rate, 3.7, create 150 to 200,000 jobs each month. That's what this economy is doing.
Sounds like Goldilocks.
It is. I mean, pretty much is. But again, sentiment changes very quickly. We're setting records, and a few weeks later, we're taking it on the chin.
Jason likes banks. Is there any area out there that's looking attractive to you right now, or any area or stocks?
Guys, I want to say as far as one thing, the bugaboo we've been talking about banks, transports, I really don't get what's going on there. They're down 10% month to date. And usually they correlate with oil. Oil prices go up, and of course the margins get squeezed. I don't know what's going on there.
I think that's a FedEx story, a FedEx UPS story, the downgrades, and something is going on there. I know there's an assumption that Amazon's going to eat their lunch at some point, but they're the ones because, to your point, some of these others have been looking pretty good. Tim, what industries or sectors are you looking at, not today, but as the dust settles?
Yeah, well, it's been really, I think, value sectors across the board, which would be things like industrials, basic materials, energy, and also financials for sure. One of the names that we like in the banking system is SunTrust. You're looking at banks, and this one included trading in the single-digit PE. But this company is an innovator in online lending, and so they have, I think, a really leg up in competing against the other banks. And so we like the value sectors, financials included.
All right, we'll see. I mean, I got waxed. I've been getting waxed this year in industrials and the materials. So we'll see. I thought they were bargain coming into 2018. But you know the old saying on Wall Street: if you liked it at 50, you got to love it at 25. Right. Gentlemen, Jason, Keith, Jason, Ken, and Tim, thank you very much.